red lights flashing, we are in the theater, the fire alarm has gone off. There is a lot of smoke, get the hell out. I mean, those are the kinds of things I look at in determining. And when might this happen? You asked that earlier, and I want to address that a little bit. It was 18. I guess I haven't run the numbers at 2,900. It's probably getting to be 19 or 20 trillion dollars of value. So the total gold market is 20 trillion, although not all that's available. Some of it's in museums. A lot of it's around women's necks, although that could be melted down. But the point is that Bitcoin could go up 10x and it would only be the size of the gold market. So we could have $1 million Bitcoin per coin, and that'd be the same size as the gold market. I think that's going to happen. I mean, the power law projects it. A lot of things project it. So I think that's probably likely to happen within 5 years, maybe 7 years at the most. I mean, maybe less. Yeah, and then after that, I think it just kind of it goes up 10x again.
Buckle up, because what you're about to hear may sound absolutely insane. Bitcoin isn't just a cryptocurrency; it's a ticking time bomb set to shake up the global financial system. Right now, Bitcoin has a market cap of $2 trillion, but that's just the beginning. The real shocker is that it's on track to rival gold's $20 trillion market cap, and is expected to surpass it by a significant margin. Larry Lepard is predicting something truly mind-blowing. Bitcoin could skyrocket to $1 million per coin in the next 5 to 7 years. No, this isn't a mistake. It's the real deal. And it's all due to a power law that's fueling Bitcoin's growth at a pace no one anticipated. We're talking about mass adoption, exponential growth, and a financial revolution that's nearly unstoppable. But here's the truly insane part. This is just the start. Once Bitcoin reaches gold's market cap, Lepard believes it will explode 10 times higher. That's right, 10 times. Imagine watching a digital asset evolve into the ultimate store of value, smashing every expectation and rewriting the rules of money. This isn't some far-off fantasy. It's the future. Bitcoin's rise will be the most extraordinary financial transformation the world has ever seen. Get ready, because what's coming next will change everything. Let's dive into Larry Lepard's explosive interview to learn more. Don't forget to like, subscribe, and enable notifications for more in-depth content. Thanks for watching. Enjoy the video.
In your eyes, what's a probable timeline for another big print?
Yeah, that's a great question. Nobody really knows.
I know it's hard to tell.
Yeah, it's very hard to tell. So no, don't bet on this. But
yeah,
it feels to me like we're getting pretty close. I think in the next couple of years, something's going to happen that it's going to break. I mean, Yellen was able to hide it by taking a lot of the debt and making it into short-term Treasury bills. The reverse repo facility was then used to buy those bills and to hide it. The deficits are extremely large and getting larger. Now, there is a positive development on the other side, which is Doge. And that's going to help slow it down, possibly, but not nearly to the degree that Elon is pushing it. He says we can eliminate $2 trillion of deficits, quickly. He's just wrong. I mean, if you look at the math, it just doesn't work. I mean, 80% of the expenditures are in Social Security, Medicare, interest, and defense. And most of those are kind of untouchable. Now, maybe not. Maybe eventually they will become touchable. But, to balance the budget today, we would have to cut those items 50%. Can you imagine the political hell that would ensue if all those things got cut in half? I mean, it's just, and by the way, you can't really cut the interest rate in half without creating more inflation. So we're in kind of what I call a debt death doom loop, where deficits get larger. Therefore, you sell more debt. You sell more debt into a fixed size debt market. Interest rates go higher. Interest rates go higher means the U.S. federal government interest expense goes higher. It's now running at between $1.3 and $1.4 trillion a year. We spend more on interest on the debt than we do on defense. And it's approaching what we spend on Social Security. I've said it in the past. It's kind of like we're kind of like the United States government. They're different because they can print the money, but they're kind of like the family that takes out a new credit card to make the minimum payments on the old credit cards and just keeps doing it. And, so far as the world's reserve currency, the largest country, the largest military, we've been able to get away with it for a lot of years. But if you look at historical comparables, and there's a great Hirschman chart in Hirschman Capital chart in the book that shows that typically when you get to about 130% of debt to GDP, we're at 125 right now, problems ensue. And in 11 out of 11 cases that he studied, you either have some kind of a collapse or you have massive inflation. And so sadly, that kind of stuff could be in our future. Now, I don't like to be, some say, well, you're being a doom purveyor. I'm not a doom purveyor. The world's a good place. Things are going to get a lot better, but we've got to transition from a broken monetary system to a sound money system if we want to have that get a lot better thing take place. That's kind of my view. That's one of my favorite charts in the book. I mean,
right.
From 1800 till 1971, the country, had periods of inflation. You'll note they were tended to be around wars, the 1812, the Civil War, World War I, World War II, Korea, Vietnam. But then in 71, when we went off the gold standard, I call it in the book, I call it a galactically stupid act. I mean, it was just incredibly dumb. They could have basically revalued gold, but Nixon didn't want to do that because it would have been inflationary. And so he just said, you know what, we're going to default. All you foreign guys who thought you had dollars backed by gold, you don't. And that started a path forward where we are today, which is a road that we were kicking the can down, and the can has gotten really big and really heavy. Mm-hmm. And, could it go on another 10 or 20 years? I suppose, but I'm not really sure. I don't see how. And to the degree that it does, it almost has to be an inflationary 10 to 20 years. Debt has grown at 8% a year for 50 years, and GDP has grown at 4% a year for 40 years. It's probably under the Stein's Law chapter. And so what this means, the GDP is what's used to pay for the debt. So if you grow the debt you're accumulating, this is like a family who's taking on debt faster than their income goes up. Eventually, once again, you can't meet the minimum payments. You can't pay the debt off. And so, and by the way, Efrat, this is not something new or unusual outside of the reserve currency. So, other countries of the past 200 years, we have a lot of examples of other countries exhibiting this exact same behavior. And what happens is they have hyperinflation, their currency fails. I mean, Venezuela, Zimbabwe, Weimar Germany, Russia, China after World War II. I mean, there are many, many countries who've had instances of currency failure as a result of spending money they did not have and then printing the money to fill the hole. Yep. And of course, eventually what happens is when a quorum of the people realize they can never stop printing, well, that's the suddenly part. As you know, Bitcoiners often say, gradually and then suddenly. My view is these other countries have done the same things that we're doing, and we know how it ended for them. Now, we're slightly different because we're the biggest and, got the military, we're the reserve currency. But what makes us think that by behaving in the same fashion, we won't have the same outcome eventually? Treasury bonds used to be the base level of collateral. They were the safest, most pristine collateral in the world. If you wanted to park your money somewhere where you knew you'd get it back and you'd earn a small return or some return, you put your money in a U.S. Treasury bond. It was AAA rated, etc. That used to be the thing that you would do financially, okay? Yeah. We know that the U.S. government's behaved so irresponsibly that that's not working anymore. And if you look at, from 2020, when we kind of started this last big print, gold in U.S. Treasury bond terms is up 200%. Bitcoin in U.S. Treasury bond terms is up 2,000%. So those, you say tipping point. Well, those are like canaries, that just keeled over dead. Like, oh my goodness, this is really a serious problem.
The dollar, once the pillar of financial stability, is rapidly weakening, and central banks are scrambling to print more money to prevent collapse. In this turbulent environment, a new wave of investors is turning to alternative assets that promise to endure the storm, with Bitcoin leading the charge. Unlike gold, which has served as the ultimate store of value for centuries, Bitcoin offers a revolutionary new way to preserve wealth. It's decentralized, digital, and immune to the unpredictable actions of central banks or governments. With inflation soaring, Bitcoin's role as a hedge against currency devaluation has never been more clear. It's no longer just a speculative investment. It's becoming a crucial tool for those seeking to safeguard their wealth from the looming financial chaos. As traditional markets teeter on the brink of volatility, the rise of cryptocurrencies marks the beginning of a new financial era. Digital currencies like Bitcoin challenge the very idea of money, offering an alternative that could radically transform the global financial landscape. Let's dive into more clips from the interview to learn more.
What I tend to do is I tend to look at the bond market as really being the tell. And we saw in September, we saw it in the UK gilt crisis, and we saw it in the fall of 2023 in the US, where the 10-year can't, the US 10-year now is in the fours. It cannot go over 5, or else they've got a real problem. At least that's what historically we've seen. And so what will probably happen is if we see the bond market start to break and interest rates go up over 5 because people have lost confidence in the US government's ability, that will be a very important tell. But that's just the third tell. The first tells, I mean, gold right now is reaching record highs, 2,900 plus, right? And there are shortages, which is not, that's not conducive to what they're trying to tell us. And then Bitcoin we're not very far off the record high. It was a record high 106 or 7. And, but we're going to bounce around between 90 and 106. Who cares? I mean, it's a lot higher than it was a year ago. And it was once again, it was the best performing financial asset last year. It was up like 126%. So those are, to me, the indicators. And, if we wake up some morning and gold is at 3,500, and Bitcoin is at 150, and the US bond market is over 5 and going up quickly, well,
it's like then, all the sirens are off.
Then it'll be red lights flashing, we are in the theater, the fire alarm has gone off. There is a lot of smoke, get the hell out. I mean, those are the kinds of things I look at in determining. And when might this happen? You asked that earlier, and I want to address that a little bit. I kind of think this whole thing will happen by 2030, but the facts that we do know are that there's a lot of demand coming from the COMEX to get gold bars shipped from the LBMA. So the big central repositories of gold, and of course, but this is one of the problems with gold compared to Bitcoin. Bitcoin's distributed, and there is no central repository. Yeah, there is no central repository, and we can all see all the addresses, right? But in the gold world, the big central repositories are in Switzerland, London, and the COMEX in the United States. And we've seen just enormous increases in volume of gold being demanded in the United States for COMEX delivery from the LBMA. And then the LBMA came out with some lame excuses that, well, it's heavy and there are lorries blocking the roads. And so it's going to
right.
Did you see that? It was pretty funny.
Yeah, I did.
There's going to be a big delay in getting you your gold. I mean, normally we could have it to you.
It's a bit heavy. It takes time.
Yeah, right. And so, of course, that is one of the flaws of gold. I mean, I can send you $1 billion of Bitcoin in 10 minutes. But yeah, so there's been a lot of demand and there's a lot of tightness in the market. And we see spreads are higher everywhere. We see premiums in the Far East, et cetera, all of which suggests that somebody and many parties are suddenly deciding that they want to buy gold, that it's important to own gold. And, there are some who've even suggested it might be the United States government in terms of, just trying to think about a reset. There have been some who've suggested that it's just very wealthy individuals who are trying to protect their wealth. And there are lots of billionaires in the world. And, if they get worried about the underlying currency, they could say, I want some gold. And the other thing I would add is that those of us who've been in the gold trade for a long, long time and studied it very, very carefully can say with a very high level of confidence that there's a lot of paper gold, what I would call, ETF and, gold futures commitments that don't represent actual ounces.
Right.
And so an ounce of gold is a physical thing. You can't replicate it. You can't print it. You have to mine it out of the ground.
Yes.
And we believe that there could be as many as 10 or 100 claims on every single one of the ounces that is above ground. And if that's the case, what you really have here is fractional reserve gold, like fractional reserve banking, and it becomes a game of musical chairs. And so if 3 out of the 10 people say, I know you owe me some gold via paper, I'll just send you the paper. Why don't you send me the ounce? Well, there won't be enough ounces to go around, so the music stops. Who's got a real physical ounce? Who's got a chair? And so that's why I don't trust the ETFs like GLD. I mean, longer term, absolutely. Bitcoin completely demonetizes gold, but that could be 30 years. Okay. That's a long time. I won't be here. Shorter term, I mean, you got to understand, 8 billion people know that gold is money. Several hundred million or more understand that Bitcoin is sounder money and better money, lower, better stock to flow, all that kind of stuff. Countries, if they're likely to reset, I mean, like China doesn't believe in Bitcoin. I think China's bet heavily on gold. We know China has more gold than they say they have. I think they're thinking they would back their currency in a currency collapse or a worldwide currency event. I believe China would try and reset with gold, which is why I think the U.S. should really go forward with a strategic Bitcoin reserve, because I think it'd be a way to leapfrog them and we'd be better off. So let me just give you a bad scenario. I mean,
Please.
Team Red won, and I'm glad they did. Versus Team Blue, from a crypto point of view, and but that could change. In 4 years, if things don't get better and Team Red does dumb stuff, Team Blue will win. And we know Team Blue doesn't like crypto, and so what they would do is, they would try to maybe tax it. They'd say, "Hey, you guys are getting unfairly rich on the back of our currency collapsing. We don't like that. We put a 90% tax on gold, 90% tax on Bitcoin." I mean, they could even do what Roosevelt did. He seized the gold in the 1930s. They could try and seize the Bitcoin. I mean, it wouldn't be hard for them to call up BlackRock and Fidelity and say, "Send all that ETF Bitcoin to us and give those."
If it's not in self-custody, yeah.
Yeah, give those people cash, which is why I argue for self-custody. So, that's all a possibility, and we just don't know how this is going to unfold. I mean, these fourth turnings tend to be kind of messy events.
As the U.S. grapples with soaring inflation and escalating trade tensions, Bitcoin's price remains volatile, unable to match gold's recent surge. Gold recently hit all-time highs, surpassing $3,000 per hour per ounce, driven by rising global uncertainty, including tariffs imposed by President Trump. Bitcoin, however, has struggled to break its previous all-time highs. Despite this, some traders remain optimistic, forecasting potential short-term gains up to $91,000. Larry Lepard views these market shifts as critical signals of larger systemic problems, noting that gold's rise indicates a loss of faith in traditional financial systems, with investors flocking to precious metals as a safe haven. Bitcoin, still in its early stages compared to gold, presents a new way to store value, immune to the inflationary pressures affecting fiat currencies. Lepard predicts Bitcoin could eventually replace gold, becoming the dominant store of value in the future. As inflation spirals out of control, Bitcoin is quickly emerging as the ultimate weapon against financial instability. While gold still holds the crown for many, Bitcoin is swiftly becoming the wild card. Its decentralized nature and explosive growth potential are positioning it as the most exciting alternative to traditional assets. Forget the usual safe havens. Bitcoin is rewriting the rulebook. As the global economy unravels, Bitcoin may be on the brink of dethroning gold to become the king of wealth preservation. The question isn't if, but when will Bitcoin break through and rise as the true contender for the future of money? The stakes have never been higher. Thanks for watching. Please share this video, hit the like button, and don't forget to like and subscribe.